Welcome to your top-rated business, entrepreneurship, self-development, and smart investment podcast. This podcast is hosted by creator and founder Dr. Dustin Steffi, and also hosted by coach, music producer, and influencer, yours truly, Jaden Rush Norvell. We are blessed for our many accolades, such as being nominated for the People's Choice Awards for Best Business Podcast, as well as raising over $5,000 last year for the Cystic Fibrosis Foundation, as well as for the Boys and Girls Club. Spanning a global reach, our podcast is in the top 4 downloads in 4 countries. Without further ado, welcome to Chopping with Fire, ladies and gentlemen. Let's chop it up.
Hello, everyone, and welcome to another episode of Chopping with Fire. You are joined with your host, Dustin Steffi. I have some fun things in the works and in the coals that I want to announce real quick. First and foremost, if you guys haven't done so already, we did just release our first local small business episode. The interview was with Speakeasy Tattoo Company. So if you haven't viewed it yet, please take a look at it. Make sure to hit the little bell if you're on YouTube and comment, like, and subscribe. Obviously, we're also on your favorite podcast platforms. So please pick a platform that you like and go today to view it and send us some comments. Also, our charities are Cystic Fibrosis and the Boys and Girls Club. With cystic fibrosis, imagine having a straw in your lungs and you're breathing out of that straw. It's probably not going to feel very well. That's what it's like to have cystic fibrosis. It's a charity that's close to me, close to Jaden, close to this podcast. If you guys have any extra resources, please head on over to cff.org/donate today. Also, the Boys and Girls Club, most of you are probably already aware of. They help our children to develop, to have that really one-on-one fun environment, to be able to make friends, to be able to play sports because they do sports as well, to be able to support our kids when we're working. They're an awesome organization, but as we know, with this day and age, these organizations need help because inflation is very real. So if you do have spare resources and want to donate to Boys and Girls Club, please head on over to bgbc.org/donate and get your donations in. I think that's everything that we have to kind of bring out right now. I've been pretty hush-hush on the new things coming in because I want to surprise everyone as things are in the works. Today starts our investment series because, again, we are an entrepreneurship, self-development, and smart investment podcast. So we're going to bring some investments to you. We got a new topic coming up as far as investing in precious metals. We have not discussed that yet, and I think that that's an important discussion. And who better to have than Patrick Yip, which he is on right now. I am going to turn the reins over to him so he can kind of introduce himself and have some fun. We wanted to change it up a little bit on you guys, so let's dive in.
Hey, Dustin, thanks again for having me on. So a lot of times I get the question, like, why precious metals? How do you get involved in precious metals? Since it is kind of a niche industry, it's definitely not mainstream. So it all started back in 2008. I'm sure many of you guys will remember we had that financial crisis. So I had your typical portfolio of stocks and bonds, thought the world was great. Everything was just fine. The financial crisis obviously hit and my portfolio got chopped in half. I then called my financial advisor and said, what happened? And I recall him saying something like, well, no one could have predicted that crash. So this got me into doing this deep dive into researching a lot of different economic systems, got me into Austrian economics, and then ultimately precious metals. So in 2008, during that financial crisis, gold actually initially corrected with a stock market, but it ended up positive for the year. So fast forward in 2011, I joined APMEX. I'm now the director of business development at APMEX and OneGold, which is a subsidiary of APMEX. APMEX, for those of you who don't know, is one of the largest online precious metals retailers in the U.S. The company has been in business for north of 20 years. We've done over $15 billion in lifetime sales. I've been with the company for about 12 years. I've had different roles across the company in merchandising, sales, project management, marketplaces, and now business development. I also most recently began running OneGold, which is an online investment platform that allows customers to purchase like a vaulted position of gold, silver, and platinum. And OneGold, just as a data point, has done over 900 million in transactions in its first 4 years of business. And then I was also involved in launching the first ever precious metals rewards credit card, and it's called the Bullion Card, and I actually have one right here.
That's awesome. That's a nice quick hit right there. So a lot of detail in that. I want to take it a step back and kind of dive into precious metals. So like if I'm thinking about it, and I'm almost 35, right? I'm thinking about like my grandfather's generation, because he would have gold bars, silver, like actually in the safe, right? As liquid like funds to be able to invest or sell if we need some money or whatever the case may be. You want to dive into that a little bit?
Yeah, there's several different ways to own precious metals. I mean, one is the physical, as you mentioned. So this is buying physical gold, silver, platinum, palladium, bars, rounds, and coins. A lot of times people have older generations, like you mentioned, grandfathers who have a coin collection. That's one way to buy it, and we do that through APMEX, where we sell you a physical precious metal for delivery. That's one way. The second way is through like a vaulted platform, such as OneGold. And we could get into OneGold in a bit, but this is basically where you take a vaulted position. So you have gold, you have silver stored at a Brinks vault located in the US, Switzerland, Canada, or the UK. A third way is an exchange traded fund, often the GLD and SLV. I personally would not get into this stuff, but we could get into that. And then a fourth way is through mining shares. So these are companies that mine gold and silver out of the ground, which could give you a lot of upside, but it also has risk too as well.
All right, so we got a potpourri of options here.
Yeah.
With that being said, I'm familiar with the vaulted option because we deal a lot with cryptocurrency, which I know that's a sore topic right now because crypto's still down quite a bit and people have lost quite a bit of money in it with government regulations and the economy even, and inflation. But that's something that I know is an investment, so I've held steady because I know it's going to pop back up at some point. What's your take on that?
Cryptos are a difficult one. I look at it too, and cryptos, like I think the oldest crypto was around in 2007, 2008. I think it's Bitcoin. Obviously has a 15-year history. I don't think it has enough data at this point. Maybe it goes to 100,000, maybe it goes higher, maybe it also goes to zero. I don't know. It's just there's not a lot of data. We don't know what's going to happen in a long-term inflationary rising interest rate environment. If a major recession hits, we don't know how it's going to react. I would say, it doesn't hurt to get in cryptos, but I would say with any asset, whether it's cryptos, whether it's gold, make sure you have the correct allocation. And the correct allocation is probably not zero. It's probably not 100. It depends on where you are in life, how much risk you could take. And you look at the probability too. Okay, cryptos, let's say Bitcoin's, I think, a little over 20,000 right now. I haven't checked it in probably a couple days. But let's say it's over there. What do you think it will go to? Do you think it's going to go to 100? Okay, fine. If it goes to 100, maybe you have 80,000 on the upside, 20,000 on the downside. What are the probabilities? You look at it and you make the correct allocation.
Yeah, something that we preach here is do your research first, right? With any investment, it's still a gamble. It's still putting money into something where it could go up or it could go down. Crypto, I think, is very volatile, whereas precious metals have been pretty steady for the most part, I would say, right? Where are we at for precious metals right now?
You're about $23 for silver, about 1,900 for gold.
Yeah, so I remember when gold was 1,000, so 1,900 now. That's a net 900 increase. So
yeah, I think a thing too that's important to talk about too is why people even get into precious metals too, and we could talk about that too with inflation if you want.
Yeah, let's dive into it. This is good for people that want to invest right now.
Okay. Yeah. So a lot of times when people hear gold, they just immediately close the door and said, I'm not interested. Right. But let's see what history tells us with gold. So right now, one of the topics in the news is inflation. No matter where you go, you're hearing inflation. You go to the restaurants, you're going to Target, you go to Costco, everything's higher, right? So we're about 2 years into the current inflationary cycle. So just back in January of 2021, inflation was only 1.4%. I'm sure many of you guys remember that the Fed saying, "Hey, it's transitory, it's transitory." Well, it hasn't fixed itself in 2 years already. So many people are feeling pinched. So the last time we had inflation at these levels was way back into the 1970s and the 1960s. So let's see what happened back then. In the 1960s, we had an inflationary cycle, and it took the Fed 9 years to resolve that cycle. And then fast forward to the 1970s, we had another inflationary cycle. It took the Fed 5 years to resolve this inflationary cycle. Okay, great. So what does that mean? So let's look at how various asset classes performed during that inflationary cycle. So let's say one option is you hold cash. You're not going to do anything. I only recommend holding cash for liquidity, for buying opportunities. I don't recommend that you have most or the majority of your assets in cash. And the reason is because inflation is going to erode away your savings. So 5 years of 6.5% inflation compounded, and 6.5% is a current number given by the BLS. I think it's dramatically understated, but let's just use it, right? 5 years of 6.5% inflation is going to erode about 30% of your purchasing power. So not the greatest outcome if inflation lasts 5 years. Let's say it lasted 9 years like it did in the 1960s. 9 years compounded at 6.5% is going to be about 45% of your wealth eroded away. So obviously not great there either. Okay, let's say, okay, you agree you don't want to hold cash. Let's say you want to hold stocks. You're invested in S&P. And who knows if history is going to repeat, right? So in the 1960s, you had the S&P lose about 20% over that 9-year inflationary period. And in the 1960s, inflation was running at 12%. So not only did you lose nominal purchasing power, you lost inflation. And then in the 1970s, stocks did a little bit better. They were up about 4% over that 5 years, but inflation hit almost 15%. So you may look like you're making money, but in fact, you're losing purchasing power. And then lastly, let's look at gold. In the 1960s, from 71 up to 74, gold was pegged before 71. It went up from 35 to 200. And so, a 5x move. There was a brief period around 74 and 75 where the Fed actually raised their interest rates above the inflation rate, which caused gold to crash from 200 to 100. And then obviously they lost control of inflation again in the 1970s, and gold rallied from 100 to 850. So an 8x move. So that's just what data says. Who knows if history will repeat, but if it does, it's likely to be very bullish for gold.
What about silver? What's the highest you've seen silver?
Silver has hit $50 in the 1980s, and it hit $50 back in 2020. Right now, it's currently about 23 and change. It's also in modern times, it also hit a low of 12 back in 2020 as well during that initial COVID crash in March. One thing I like to do, and I mentioned it briefly on the Bitcoin, is you look at your risk and your reward. So silver's at 23. Maybe it goes down to 12 again. I mean, it's possible. So let's say you have $11 in the downside. It's also been at $50 twice in history. So maybe you got like almost $30 in the upside. So you got 11 on the downside, actually 27 on the upside. Do you buy it? Hey, it couldn't hurt to get in right now.
I'm one for diversifying investments, right? So if I'm investing in metals, I'm investing in a couple different ones just to kind of see where it goes, right?
Yeah. And normally what happens in previous cycles too is you had gold initially start running up, and then silver followed after gold, maybe a couple months later, and it often rallies to a bigger and faster extent than gold. So like a thing that might be interesting is maybe you get into gold. When you start seeing gold rally, maybe you sell some of your gold, get into silver, and then hope silver rallies like it does in the past and exceeds gold on a percentage basis.
And is it similar for investing in precious metals as it is in crypto, where you don't have to buy the whole 1900, you can buy a percentage of it?
Yeah, so that's where we came up with OneGold, because I guess the old way is you wanted to buy a gold coin, a silver coin. Okay, silver coin's $23, a gold coin's $1,900. Well, let's say you wanted to put $1,000 in. You're like, well, I want to save $1,000 every month, but $1,900, I could get a gold coin every other month. So we created, back in 2018, we created OneGold. So APMEX, our company, partnered with Sprott, a large alternative asset manager out of Canada with about 22 billion under management, basically a large investment management firm, to come up with OneGold. And what OneGold is, it's a online investment platform that allows customers to buy, sell, and trade vaulted positions of precious metals. So a lot of people call it like the Robinhood or Coinbase of precious metals. It's basically one of these new online investment platforms that is super easy. You can get started in a couple minutes and own gold. And what OneGold does is we first start by having agreements with various vaulting companies around the world. So we have an agreement with Brinks, with Loomis, with the Royal Canadian Mint, and a lot of other partners around the world. We then source wholesale bars, so 400-ounce gold bars, 1,000-ounce silver bars. These are the bars that you often see in like movie scenes, that the big industrial bars. We then place it in these Brinks and Loomis vaults, and then we make it available for customers to sell. And then you could buy as little as a 0.001 ounce of gold, 0.001 ounce of silver. So if you had a couple bucks, you could own gold. And prices are super attractive too, since you typically own part of a larger bar. So instead of you actually having a gold eagle or a gold maple leaf, you may have fractional ownership in a large 400-ounce gold bar. Gold is sold for as little as 0.4% over spot, or 40 basis points, and silver is sold for as low as 1% over spot. All the metals regularly audited by a top 5 accounting firm. It's insured by Lloyd's of London. And let's say you said, hey, I want to take possession of my metal. Or let's say you want to put $500 or $1,000 into gold every single month. And when you have enough for that ounce of gold, you want to actually take your gold eagle. You could swap your position at OneGold and redeem it for any of the 25,000 products available at APMEX.com, and we'll ship it next day directly to your house.
So then it would be like my grandfather. I could have that actual physical asset in my safe.
That's correct.
And I think that's where a lot of people are these days, is the ones that invest in crypto understand how crypto is, but it's not a tangible asset. Like, I don't have Bitcoin like in my safe right now. It's digital.
Yeah, and that's a good point too. With physical metals, there are pros and cons. Obviously, the thing you mentioned, it's tangible, it's physical, it's off the grid. You can't hack it. There's no way to hack your gold coin if it's in the safe. Unlike some of this new technology, if you have, I mean, you hear a lot of these crypto exchanges too, and people are questioning whether they want to hold their cryptos on the exchange because it's possible that it could get hacked. You never have to worry about that with physical gold. No one's ever going to hack it. They can't hack a physical item. Taxes are self-reported too. I do recommend that you report your taxes, but some people choose to do what they want to do. It's aesthetically pleasing to own too. So a lot of times people collect these things. If you ever held real gold, it's actually a very interesting feeling too. So gold is about 19 times heavier than water. So like, you hold something that's small and you're like, this is pretty heavy. Like, it's a lot denser than any other thing that most people hold. The biggest con about owning physical gold is a small stack quickly turns to a large stack. So everyone I tell who wants to get into precious metals, they start with maybe a couple $1,000s, then it becomes tens of thousands, and then maybe if you're fortunate enough, it becomes a 6 or 7 figure sum. Unfortunately, that's problemsome. It's not the greatest idea to have $1 million in gold held in your house. I mean, we have people who's purchased, north of 50 million from us at APMEX. I mean, that's up to them to decide where to store it. But all it takes is one guy breaking into your house with a gun, and it doesn't matter what kind of security, what kind of safe you have, it's gone, right? And that's why we have other different ways too. OneGold is a great example. I do recommend, and you alluded to it earlier, I recommend that you spread around your risk, diversify a little, don't have all your eggs in one basket. And even if you decide to go in gold, don't have it all in physical, don't have it all in OneGold, spread it out a little bit.
Where's platinum at in pricing? Because you did bring up platinum as well.
So platinum's around $1,000 an ounce. It is actually, low compared to gold, of where it has been trading historically. I mean, in let's say in the past, I would say maybe 5 or so years, it has been a little bit misaligned from gold, because typically platinum has always traded at a premium to gold. Now it's trading at a deep discount. So gold's at 1,900, platinum's about 1,000. So you do have people who are speculating that this ratio is essentially going to return back to normal, where platinum is going to trade at a premium to gold. And whether that is gold going down or platinum going up or a combination of the both, people are saying, hey, maybe I get into platinum and see where this thing goes. But it, relative to gold, it does look a little cheap.
See, that interests me. That's probably where I would start my investment, given where it was in history before now.
Yeah, and there's people who, a lot of times, there's another thing called the gold-silver ratio, where people look at the price of gold divided by the price of silver. And this ratio has been as low as, let's say, about like 16, and has been as high as 120 in the last couple of years. And the thought there is, when the ratio is high, you're getting more. Each ounce of gold is worth more ounces of silver. So basically, silver is undervalued compared to gold when the ratio is high. And then when the ratio is low, gold's overvalued compared to silver. So a lot of times people trade this ratio. Like I said, if it's high, it's currently about 80-1. People are saying this historically has been high. They're selling some of their gold, buying silver, and then when the ratio goes lower, they'll swap it into gold.
Now, the exchange that's virtual, is that encrypted? Do you own the keys to that? Like, can you explain that a little bit? Because for my crypto individuals, we have keys and safety nets and stuff for our investments. How does it work for the precious metal side?
Yeah, so it's all online through OneGold. We did actually have basically a ledger, a blockchain ledger way back when we first launched. But then the person who was actually managing the ledger actually charged us fees. So we asked a lot of our customers to say, hey, do you like this ledger? Do you value it? Do you not value it? And then a lot of times people said, hey, I would rather pay a cheaper price and not have this ledger. And this is just related to OneGold in our space too. So a lot of times people trust APMEX, who, as I mentioned, is one of the largest online precious metals retailers in the world. They trust Sprott, who was one of the original founding partners. And they just said, you know what, that's sufficient. And my thought is, like, if you have a bank account with Bank of America, do you trust Bank of America enough that your checking account is going to be safe, or are you skeptical? And I know everyone has different. I see you smiling there too. I think the banking system's a whole different discussion, but maybe for that amount that you have in there, you trust it and you trust the backing. And my thought too is, like, if you really don't trust it, we offer physical redemption too, or we offer APMEX. You could always hold your gold in your house or in a safety deposit box or wherever you choose. So we like to have the solutions for all types of customers.
Yeah, it's funny you bring up the banking question, because we addressed that earlier last year. And I don't believe in any of the banks, because the banks take our money and invest it to make money for themselves. And so I'm not a fan of that centralized model per se.
Yeah, to me, it's like, yeah, I'm not a fan of it either, but you have to keep your money somewhere. And I do have a checking account. I mean, that's the only thing I really have with the Bank of America. Everything else is spread out in other places. But I mean, I'm skeptical about it too as well.
Yeah, it only takes one bad thing to happen, and then all of a sudden, oh yeah, we don't know where your money is.
Yeah. Well, actually, it's I think that, and how it appears in the bank, is technically not your money; it's the bank's money. As soon as you deposit it, and basically they could do whatever you want. Like, they could loan it out, do whatever. It's no longer your money. You just have a claim at that point.
And that's a scary thing, and that's something that I really want to educate my listeners on, which is diversifying where your money's going, because you never know if it's going to be there or not.
Yeah, and I think it brings up a good point back to gold. If you look at currencies, for example, the US dollar, since the pandemic, I think there's different stats out there, depending on what metric you're using, but about half the money in existence has been printed in the last couple of years, since 2020. And to me, that's scary, because if you're working, you're earning dollars or euros or wherever you are in the world, and these central banks are now just printing it up. So you put hours into that, or whatever you do, you make money, and they just devalue it because they just doubled the currency supply. Well, that's kind of scary. So, like, you want something that they cannot just print away, whether that's precious metals, real estate, something that cannot just be made out of nothing with a couple clicks.
So for you personally, I know you're diversified and invested in precious metals. Have you made a profit with this where you're comfortable, or like how long's the typical turnaround people would see on starting to see profitability?
Yeah, I'm profitable. I started buying precious metals probably since 2008 after that financial crisis, where, as I mentioned, I lost quite a bit of my net worth. And back in 2008, gold was a lot lower, $800 an ounce. So I'm in. I'm staying in gold right now until the Fed gets inflation under control. And what's happened in the 1974 to 75 and in 1980 is when the Fed funds rate was higher than the inflation rate. And Paul Volcker was the Fed chair back in the 1980s. And what he did was inflation was running at 14.8% in the late 1970s. And he said, I'm going to tackle inflation. I'm going to raise the Fed funds rate to 20%. So he raised it 5%, 500 basis points above the inflation rate. And then sure enough, what that caused a lot of assets to crash. Everyone ran to the dollar because they said, now we could get this massive yield on the dollar. Everything basically crashed and the dollar was essentially saved back then. So where are we right now? We're at inflation as at 6.5% is the latest number. The Fed funds rate is at 4.5%. I think they're going to increase interest rates today, probably 25 basis points. So let's say it raises it to 4.75. I mean, inflation's not under control until, maybe inflation goes down, which typically inflation gets sticky. And then the latest job reports was strong, which is not what the Fed wants to see. Obviously, a strong jobs report means people are employed, people have money, people are spending. That's inflationary. So, jobs report is strong. Inflation is unlikely to go down. The second way that they could solve it is maybe the Fed funds rate gets increased to something near or above 6.5%. Well, they're still a long way from that. Or the third way is maybe a combination of both. But I mean, time will tell. But if you just look at the past, inflation typically gets stickier. So like it's easy to reduce it from the 9 to 8 to 7. But then when you get from 6 to 5 to 4, it's a lot harder to reduce that down.
So you touched base on current. So current is lower than back in the 70s and 80s. But it doesn't seem like it. It seems like we're worse off right now, in my opinion.
Yeah, I think the Fed inflation rate or the BLS inflation rates are dramatically understated. Like if you told someone, "Hey, inflation 6.5%," you're like, "That's not accurate." I mean, everywhere you go to Target, you get gas. Go to Costco, you do anything, and you're like, "That's not 6.5%. That's like 30%. That's 40%." I mean, depending on what you get, but I mean, there's a whole bunch of data looking back that says that the numbers are kind of fudged these days, but. Basically the high level takeaway is inflation's here. It's likely not going to be something that's easily resolved in the next, let's say, couple months or a year or two.
I think my barometer is taking a look at the price of eggs. I know everybody laughs about that, but I'm paying $8.99 for a dozen eggs, and that was $3.99 a few years ago.
Yeah, I mean, and that's a great example too. So in that case, inflation's over 100%. I mean, it's double. So if I told you 6.5%, you're like, yeah, that's not right.
That's where I have an issue, right? And that's where a normal person would have an issue when we're looking at gas, eggs, milk, food in general. It's above that 6.5% by a long shot.
Yeah. So I think that brings it back to, so like inflation's here. I mean, what do you want to do? As we mentioned, stocks were down last year, bonds were down last year. Where do you want to go? And we could get into the historic gold allocation too, if you want, what history tells us.
Yeah, I mean, more information the better. This is research at this point.
Sure. Yeah. So normally if you ask your financial advisor, how you should allocate your portfolio, they'll say, hey, you should probably have a combination of stocks and bonds. And the thought is, if you want to have higher risk, higher return, you do heavier stocks. If you want your lower risk, lower volatility, you do bonds. And then, it all works out. But like we mentioned, stocks and bonds were down both down last year. So that portfolio didn't do much for you. So we looked at the last 50 years of data. So I want to look from about 71 when gold was not pegged, when gold was trading freely with the market, up till, let's say, the last couple of years, and then looking at 10-year average returns to look at the proper or the right allocation or the best allocation that you could have with precious metals. Everyone's allocation should be different depending on your place in life, but this is just data. This, obviously, do your own research. But if you had a stock portfolio, you made an average of a 7% real return and a 5% standard deviation over a 10-year investment period. So I'm not penalizing stocks in 2008. Bonds basically had a 5% return, so 200 basis points lower than your stock return, 3% standard deviation, so also 200 basis points lower in your standard deviation. If you went 80% S&P, 20% gold, so you got rid of the whole bond equation too, you had a real return of 6.7% annually. So 30 basis points lower than your stock return, but almost 200 basis points higher than your bond return, and a 2.7% standard deviation. So much lower, actually 30 basis points lower than your bond standard deviation. So you get all the upsides of stocks and all the low volatility of bonds by doing 80% S&P, 20% gold. But obviously, I'm going to say everyone's allocation should be different. Obviously, if you're more risk adverse, maybe you go heavier gold, or more. If you're more risky, maybe you go heavier gold. If you're in your 80s and you may need the cash, maybe you don't do this and you hold cash.
Yeah, that's a really good call out in my opinion. So I want to make a statement real quick. I am not a financial advisor, so this information is purely for doing your own research before you invest in anything. I don't know if Patrick is a financial advisor, so I'm just making the disclaimer. I am not a financial advisor.
Yeah, I am not either. And that's something I 100% agree with. A lot of times people ask me, like, how much gold should I get? Well, it depends. I don't know your situation. If you need this money to pay your bills, then you have more important things to do than buy gold. If you have millions in the bank and you're sitting in cash, maybe you should buy some gold. It really depends.
Yeah, so remember, smart investments are doing the research, really making sure you have the money, your bills are paid first before you invest in anything, because any investment is a risk.
100% agree.
So Patrick, if one were to want to get a hold of you, what would be the best course of action to get a hold of you?
Yeah, I would say, first of all, definitely check out precious metals. If you want the physical precious metals, so you want to basically buy gold, buy silver, have it delivered to your house, you could check out APMEX.com. That's APMEX.com. If you want that vaulted solution, which is that new and modern way to purchase precious metals, check out OneGold.com. That's ONEGOLD.com. And if you have any questions, feel free to reach out to me directly or email me. My email is Patrick, PATRICK.YIP, that's YIP, at APMEX, APMEX.com.
And for my listeners, I will have the links in the description, so that way it's easy to click and go to these sites. I'll try to have Patrick's information in there too on the guest profile page on Chopping with Fire's website, so that way you guys have medians to get a hold of Patrick. Patrick, last thing, as an investor, what is one key piece of information you want to leave the listeners with today?
I would say find what you love and do that. Like, I personally love precious metals. I mean, I was talking to my wife, and when I have enough money, it's debatable or whether or not I'll leave here or not, because I personally love doing what I do. And you find what you love, you do it, you end up making more money than you probably ever thought, because you're doing it in your spare time, you're doing it in the evening, you're doing it in the weekends. You're going to have that competitive advantage over others who are just doing it as a job. So find what you love and do that, and you'll likely succeed.
I like it. Thank you, by the way, for coming on. Thank you for discussing precious metals. We have not discussed that yet, so I think this is good all the way around.
Great. Well, thanks again for having me on.
Thank you.